Hi, everyone. Thank you so much for joining us today. My name is Soka Yus. I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. In today's topic, we're going to talk about Student Loans 101. So it's just a really basic, just 30,000 feet overview of student loans. If you have more specific questions about your current student loans or student loans that you might be getting for your kids or anyone else, you're more than welcome to reach out to me. This is my contact information. The best way to reach me is through the email. So if you can't write this down now, then we can, my contact information will be at the end of the presentation as well. So just to get started, what's on the agenda today? We're going to talk about paying for college, federal student aid, also known as FAFSA, identifying your loans, understand repayment options, and prepare for repayments. So first things first, paying for college. How do you start paying for college? What do you do? How do you start? Things like that. So college savings plan. So a lot of employers have or a lot of institutions, banking institutions, you can reach out to them and see if they have a 529 plan. But there are some employers that offer scholarships too. So if you work for Mayo, you can reach out to them and see what kind of scholarships or college savings plan they have available from you, along with other benefits that you may have through HR or through Mayo. So always look for scholarships through your employer, scholarships in your community, scholarships within the school. Of course, you can look at local or federal and state scholarships as well. You can also get student loans. So there are two different types. You can get private student loans or federal student loans. The private student loans will be where if you go to an institution and apply for, student loans, just like any other loans, they're going to run your credit. They're going to take a look at your debt to income ratio and see if you're eligible for the loan. But if you apply for federal student loans, then you would have to apply for FAFSA, which we'll talk about here in just a little bit. So FAFSA or federal student aid, so before each year of college, students can apply for federal grants, work study, and loans with a free application for federal student aid. That's what FAFSA stands for, your federal aid eligibility. So who qualifies? Pretty much, a lot of people qualify for this program, for the federal student aid program. There's a lot of qualifying criteria that you can take a look at on studentaid.gov. When to sign up, it's typically open October the year before, or so the sooner that you apply for it, the more likely you are to, just remember it's a first come, first serve. So if you are able to apply for it, the sooner the better for you. And how to sign up, you would simply go to studentaid.gov. Again, I'm going to reference studentaid.gov a lot in this presentation. They have a lot of updated, a lot of new and important information on there for student loans, whether you are interested in federal student loans or personal student loans. So please refer to that for the most updated information. As we know, with everything going on right now, student aid is constantly evolving. So that's why this presentation is going to be a very basic overview. And how to successfully repay your student loan back. What you want to do is you want to identify your loans, right? What kind of loans do you have? Is it federal or private student loans? Do you have, subsidized or unsubsidized loans? So if you don't know where to pay your loans or what kind of loans you have, you can actually log on to your credit report. There's a lot of different services that's able to pull up your credit report these days. Without even paying a fee for it. Or you can go to annualcreditreport.com to pull up your credit report, and then you can take a look and see what kind of loans are on there. Then you will reach out to your loan servicing company. There's a few that switched throughout the years, so within the last few months. So it's really important that you understand who your student loan servicing company is, who they were before, or if they're in the process of changing it to a new one. Download your information so that way you can see what the balance is, what the interest rates are on different loans, and what the payoff amount is. So determine what kind of loans you have and then start, preparing to pay it back if you haven't already. So to prepare for repayment, you might want to set a budget first. We can talk, if you need help setting a budget to see how much you can afford with your student loans, you're more than welcome to reach out to me. But typically they'll tell you how much you have to pay back each month. So if you cannot afford that, you can always reach out to them and see if they can put you on a much lower payment arrangement. And you want to understand your repayment options. So a lot of times I've been seeing on the news that these student loan servicers, the people that answer the phone, the representatives, I guess they're working on like a timed phone call. So they're trying to, if they're trying to give you some short answers on your questions, be sure you ask very detailed questions. Be sure you follow up on your questions. And don't be scared to continue asking questions until you understand your repayment options. If they're just trying to get you off the phone, just giving you a very basic answer, then call back or ask to speak with a supervisor to make sure that you yourself, you understand what kind of repayment options you have for your current income, for your current lifestyle. So it's really important that you understand that, because if you're too scared to ask, it's several questions, you're going to be the one that's affected by that, because if you can't make the payments, or if you misunderstand what kind of repayment options you're in, then it might affect you later on if you're trying to get your loan forgiven. We want you to learn about the Public Service Loan Forgiveness Program, which Mayo is eligible for. So if you need to know more about that, you're more than welcome to reach out to me, or you can go to studentaid.gov. So again, that's a Public Service Loan Forgiveness Program, the PSLF program. So again, when we talk about identifying your loans, always go to studentaid.gov. You'll see who your student loan servicers are, or go to annualcreditreport.com. And then again, talking about the different kinds of loans, the subsidized, unsubsidized, or private loans. So it's really, really important that you know which one you have. And if you're concerned about if your loans are eligible on the right repayment plan to be eligible for the public service loan forgiveness, then you might want to go to student.gov and see if you need to be put on the right repayment plan. So this is an example what a subsidized loan looks like. So the education department pays the interest while you're in school. So for example, if your loan total balance is $3,977, it accrues interest every month, but the government pays for that. The education department pays for that. So that way you end the school year, or your school time with pretty much the same balance. So as you can see here, the starting total was $3,977. There's interest being accrued on it each month, but the education department pays for it. So at the end, by year 4, whenever you graduate from college, your balance will still remain fairly close to where the starting point was at. An unsubsidized loan is mainly for undergraduate and graduate or professional degrees, and has higher loan amounts, but the government does not pay for, so the unsubsidized is for graduate and undergraduate professional degrees, and it typically has higher loan amounts. So understand your repayment options. Again, are you on the standard 10-year repayment plan? Are you on the graduated payments that increases over time? Or are you on the extended repaid where you can repay up to 25 years? There's income-based repayment programs, so the payments are calculated based on the family and income size. So those are some of the options under the income-based program is Pay As You Earn, Revised Pay As You Earn, which is now the SAVE program, income-based and income contingent, a few more. So it's really important that you understand what loan repayment you're under. So reach out to your student loan servicer and see what you're under. Is it something that you need to consolidate your loans and put under a different repayment program in order for you to be eligible for the forgiveness program or not? So again, private student loans is not from the government. It's from different, from different institutions, whether it's your bank or your credit union. So it's based off of lenders' policies and regulations, and a co-signer may be required. So sometimes those co-signers are your parents or whomever it is that's your guardian. Co-signers can be released after meeting the requirements. So this is what a payment example may look like. So wondering what different loan amounts and repayment types could look like for you. So typically at $37,000, if you're on a standard repayment program, the monthly payment would be roughly $394 of the total interest paid. By the time you're completely done paying off the loan, you'll pay about $10,000. The graduated standard repayment is roughly about $222 for $37,000 loan balance. The interest paid varies because the graduate programs means that it starts out small, and as your income gets bigger, it gradually your payment gradually grows with that as well. The extended repayment, remember this is a 25-year one. Out of $37,000, they may be asking for $216 a month. So the total interest you're paying on that is $28,000. So that's $37,000 plus the $20,000. That's a total loan paid. The repay program, $350, a total interest paid of $12,000. But we also have student loans here available for you to apply for here as well, if you want to consolidate your loans. So out of $37,000, roughly your payments will be around $303, and the total interest paid will be roughly around $17,418. So just to review different options that you have there. So that's what you might be looking at for the different years. So wondering, and then if you're increasing it to like $50,000, then, out of the standard repayment, out of 10 years, you're paying $530. The graduated repayment is probably about $300. The extended repayments, the 25-year one is probably $292. The repay one is $350, income-based $524, and MEFU consolidation loan is roughly around $409, depending on your interest rate. So remember, your interest rate is based off your credit score too. So understanding repayment options for federal consolidations, you can consolidate your subsidized loans with other subsidized loans, but you cannot consolidate subsidized loans with your unsubsidized loans. So you may have two different types of loans that are under federal. So you can consolidate all your subsidized loans together and then all of your unsubsidized loans together, just so you can make your payments to that one loan and make a bigger impact on the repayments. Private loan consolidation, you consolidate both federal and private student loans into one loan with a private company, but you cannot consolidate private loans into federal loans. The repayment term depends on the institution that you go with. Typically, it's 5 years, 10 years, or 15 years. But you get the option to shop around a little bit too. So you can go to multiple different institutions to see what is the best interest for you. Or, the best thing for you to do is, if your credit wasn't good when you first got the private student loans, but now you're doing a lot better, you can always consolidate those loans and get a lower interest rate too. So the pros of private consolidation, you manage fewer loans, you save money on a lower interest rate. So lower interest rate means lower monthly payments. That means you can save more money with lower interest rate. You can improve your cash flow with low monthly payments, release a cosigner sooner too. So if your parents helped you cosign for your student loans when you were 18, 19, whenever you started college, and now you're graduated, you have your own job, and you want to release your parents off of your loans, so you can consolidate your federal student loans or private student loans off of those loans, and then that way you can get it only under your name too. The cons to consolidate your federal loans, you're forfeiting benefits provided by by federal loans. As we're aware, during the pandemic when there was that long forbearance, if you consolidate your loan from federal loans to private loans, you're forfeiting that forbearance that the federal government was offering. What happens if you can't afford your loan repayments? You can always ask them for forbearance. Just because the pandemic forbearance is over, that doesn't mean that you still won't qualify. That doesn't mean that the forbearance won't be available for you personally. What it does is you just have to reach out to your loan service provider, let them know of your financial situation and what kind of payment options or hardship options they have available for you. What that does is it postpones your payments. The interest will continue to accrue, which can cause your balance to increase. So it means that you don't have to pay your, let's say, $350 monthly payment for this month or for the next 6 months. But remember that the interest on that balance is accruing each month. So even though you don't have to pay for it, your balance is still growing though. So make changes in expenses in your lifestyle to better afford your student loan payments. So even if you're on forbearance, you can still try to work with them to see if you can just pay the interest amount and not the full monthly payment. And if you're able to do that, then at least it's preventing your balance from getting bigger. So during the pandemic forbearance, as we're aware, so there was the CARES Act, forbearance and interest pause effective March 2020. Executive order were from President Trump and President Biden. The repayment began back in October 2023. So some frequently asked questions here. Should I consolidate and refinance my student loans? Consolidation may not be the right choice for all borrowers. Depends on the current rates, though, type of student loans, whether it's federal or private or co-signer release. That means that if you're in a better financial situation, a credit situation, now than you were when you got the loan, it might be a wonderful time for you to consolidate your student loans, even with even if the interest is a little bit higher now than what you got when when you first got the loan. At least then you can release any co-signers that was on there too. What is the best way to pay off student loans faster? If there's no repayment penalty, they can be paid off anytime. So that depends, that's on federal and private student loans too. Refinancing your student loans can lower your interest rate, saving you money, and you can make those extra payments to reduce your principal balance and save money on interest. What if I cannot afford the payments? You can enroll in an income-driven repayment program or the SAVE program. That's currently paused right now, but you can always call your student loan servicer to see what is available for you there too. So that's paused right now, but it might be active again by next week, but we're leaving it on here just in case, things change very quickly. So how long does it take to pay off student loans? A standard repayment is typically 10 years, but again, you can be on different repayment programs. You can be on different forgiveness programs depending on who you work, who your employer currently is, or where you're enrolled at. Can I deduct student loan interest for taxes? Yes, that is the benefits of paying on your student loans. You can qualify to deduct up to $2,500 of student loan interest per return year, and you can claim the student loan interest tax as an adjustment to your income. You do not need to itemize deductions to claim it. So again, if you have more questions about this tax part of it, you can reach out to your accountant or a CPA or a tax advisor, a tax specialist to talk about that. How do I remove student loans cosigner? You can refinance or consolidate your loans to remove cosigners. So if your parents are sick of having your student loans shown up on their credit report, now that you're a working adult, you have your full-time job, it might be a good idea to refinance or consolidate your loans. How do I know who to pay and when, how do I know who to pay and when to my federal student loans? You can pull up your credit report, or you can go to studentaid.gov, and that should all be on there too. Do student loans affect my credit score? It does. It affects your credit score, even if it's on forbearance or even it's on pause. Because if you were late before, it went to forbearance, it can still affect your student loans. So yes, your student loan amount and payment history will go on your credit report. On-time payments will help you maintain a positive credit score, and failure to make payments can hurt your score. But before you fail to pay your student loan, it's always good to reach out to your student loan servicer, let them know exactly what's going on with you financially, and see if there's some sort of financial hardship program that they can put you on. So can a creditor ask me about the alimony, child support, or separate maintenance payments that I or my cosigner receive? A creditor may ask whether income stated in your application comes from alimony, child support, or separate maintenance payments. However, the creditor must tell you that you do not have to reveal such income if you don't want to consider it. So the next question is, what is the Biden SAVE plan? So that's been all over the news. It's currently paused. So I just left this part blank because it's really important that you understand that there's a SAVE program out there. It's just currently paused, but as soon as it's lifted, I advise everyone to go on there to try to see if they qualify, see if they can get approved for the SAVE plan. If you want to learn more about the student loans, your personal student loans, or if you have any, very basic overview questions about student loans, you're more than welcome to visit our website at mayocreditunion.org/student-loans. So if you have any other questions, you're more than welcome to reach out to me. This is my contact information here. Or again, you're more than welcome to visit studentaid.gov to get the most updated information on student loans. Okay? Any questions, Christian? Okay. Okay, perfect. Thank you so much for joining us today.